indicator, my friends, to learn is the MACD, or the moving average convergence divergence. So it's one of the beautiful and very useful momentum indicators. So trading price action needs a lot of practice, and I see a lot of traders jumping into price action to start with, and then unsurprisingly sit through large drawdowns or lose their capital. So when you're new to trading, it is okay to take the help of indicators, moving averages, and the indicators that I talk about. But don't have so many indicators on your chart so that you cannot see the price, right? I've seen crowded charts where there are so many moving averages, Bollinger Bands, all of them put together, then you can't see the charts. The idea is through the indicators, you are reading price action, right? The ultimate aim should be to rely only on price. Where price goes, I go. And that can be done through candlesticks, but till you get the proficiency, and if you want to trade on your own without any kind of help from anybody, without relying on tips, this will be a useful video for you. So first thing we do is go to indicators on TradingView and add something called MACD. Okay, moving average convergence divergence. I've already added it, so I'm adding it, I'm keeping it here. Now what does this do? So this is a indicator which is derived from the 12 EMA and the 26 EMA of the stock. So it is derived from a derivative of price. Moving average is a derivative of price. So MACD is derivative of price. The advantages: it abstracts you from sudden volatility. The disadvantages: you will be always entering late by using this than, let's say, if you compare with the price or the moving average, right? So there are pluses and minuses to both. Now what we do is, if the 12 is above 26, then the MACD line will be above 0. Okay, and if the 12 is below 26 EMA, then you can see that MACD line will go below 0. Okay. Now to smoothen it, you always add a moving average to that. You generally add a 9-period moving average of the MACD. So the blue line here is called the MACD line, and the average is usually called the signal, right? So when the MACD line crosses the signal from down, it's usually bullish. And so some technicians say that you should take signals, bullish signals, only when the MACD is above 0. And some people say that you can take it anywhere, right? It depends on, for me, it's, see, when it's overbought, you can see the number of false signals you're getting here. I don't even need to look at the chart. The price will be going up, right? So things in overbought state remain to in overbought state can remain in over very, very long time, right? So just a crossover is not going to tell you anything. So what we need to do is, we need to also understand price. So for example, here you have a crossover, right? But you immediately know that price has gone so much, the previous swing low is somewhere over here, right? It's not going to break that so easily. So now we have a swing low here. This is one of the trough. Then you have another sell signal here. We need to wait for it to break this swing low, right? Like that we have to see where it actually breaks that swing low, and so far it hasn't broken it anywhere. So if you had remained long, then you would make money, right? So try to take the signal close to the 0 line for good results. It happens once in a while, and that's good, because if you want to trade less, if you trade more, your broker is going to benefit, not you. So, and you can imagine this, if you do it for only the FNO stocks, you can potentially get 3 days a day, right? So let me give some examples, right? So now this is the chart of BHEL. We all know how BHEL had a phenomenal run. Now what happened with MACD? You can see the crossover happens here. It crosses the zero line, and voila, what do we have? Ooh. From 130, the stock is now at 300. It's not even 1 year, right? So it's a very as I said, this is a momentum indicator, right? So the advantage here is you're getting your momentum. Now when you buy here, what will your stop loss be? Either you can use moving average, or the smart ones amongst you, those, by smart I mean those people who have read my book, would have already spotted a beautiful little pattern over here. So many bullish patterns over here coinciding with this, right? And what are the patterns? Please read my book to find out, okay? And so you have multiple confirmations of your crossover from this, right? Usually people combine MACD with RSI for confirmation, or combine RSI with MACD for confirmation. RSI gives you the early signal than MACD. So, but then people use RSI to understand the trend, and then use MACD to confirm the trend, right? So we'll come to that, but this is how the MACD works. Now let's look at RSI. So we go to indicators, RSI, relative strength index. Don't need to change anything. So here, when the signal happened, what was the RSI telling us? RSI was looking down, so it's not a wise time to enter the trade. When would be a wise time? When RSI is broken above this. That means somewhere around this line, right? There is a price top also, RSI top also. When it breaks out, you can enter, right? Now RSI is an oscillator. That means it will always remain between 0 and 100. It cannot cross either level. Well, as a momentum indicator, MACD can go up to any level or go down to any level. There is no restriction. So this is how you can use RSI to confirm your decisions with MACD. So by RSI itself can be used for trading. There are several people who trade based on RSI itself. So what happens there is, let's say there is a peak, two peaks which are formed here on RSI, right? I must use a smaller one. Can I? No. So there's two peaks which are formed here, right? And when it breaks above this peak, it's called a failure spring, right? It's a positive failure, so the price should logically move up from here, right? Similarly, when the RSI is below, here it's marked as 80, well, let's make it 70-30, okay? By default it comes as 80-20. Some people use 60-40, made popular by a certain YouTuber, but I prefer to stick with the methods that I have learned from Technical Analysis of Stock Trends by Edwards and Maggie. So you can see that there is a breakout here, and it by itself you can use it as a trading system, and when it goes below hardly ever went below 30. Yeah, so here when we can, not really, let's stick to the upward one. So here we have two peaks, let's say. So what we do is we join the bottoms of those two swings. So bottom is here and this one's bottom is over here. So only we can draw trend line is this. So till this trend line breaks, I'm not really bothered about exiting the stock, right? So, or I get a confirmation to enter when, if the RSI had gone above this, then I would have entered. So I wait for the next one, and it's slowly reaching level of overbought, and I have a crossover here, and here I have a swing high here. So above this I can buy the stock. That's how the RSI we generally look for. So conventional technical analysis tells us when it goes to 70 or 80 you short the stock, but that hardly works. So what you do is you wait for that failure swing to happen. That means you get data points which you can connect, and then RSI crosses above that point, which gives you entry into the stock. And here you can see that it beautifully also converged with the MACD crossover. So this is a very reliable signal, and it gives some fantastic results as well. Now let's look at one more stock before we wind up. So this is Arvind. So somewhere in March of 2023, so this is a trade that I took, so although with candles, but so I remember this very well. So here we can see that the MACD gave a nice crossover here, right? And the stock made a beautiful bullish pattern. If you know the pattern name, please share it in the comments for people who have not read the book to know. I definitely am not going to tell that till they read the book. And if you look at RSI is nicely moving up, and it is moving into the bullish territory, right? So this is also a perfect buy, and from 90 it went to 115, if I remember, in a few weeks time. So this is how you can use these two indicators, and without relying on anyone, you can trade on your own. I suggest you trade in only in liquid stocks, wait for the opportunity. For example, it should not be construed as a trading recommendation. I don't give trading recos. I am not a tips provider, I'm not an analyst, I'm a trader. If you look at BPCL, what's happening in BPCL now? Voila. What do we have here? A positive crossover. What do we have here? RSI trending up. What do we have here? Indication of a negative pattern. Beautiful, isn't it? So, disclaimer, I am holding BPCL. And there are more stocks. I'll leave it to you to find out, right? So, just pick a few very well traded stocks. Don't go around making scanners with this, right? Train your eye. And that's how I would do it, right? And two things most important: know where your stop loss is and make sure you're comfortable with that stop loss, because here the stop loss can range between anywhere between 5 to 10%, right? So unless you use some price action technique to optimize your entry, by default that is going to be a stop loss, right? For example, here it's close to you can see around 7%, right? So that's one thing which makes your money management very critical. So you should not be taking more than 1% risk on your whole portfolio size. That's your risk, right? And your position size should be derived from that. So if you have, let's say, 1 lakh capital, then your risk should only be 1,000 rupees, right? So the 1,000 divided by the stop loss is your quantity. Simple, right? It depends on your account size. So if you have 1 crore rupees, then your risk is going to be 1 lakh rupees, and 1 lakh divided by the stop loss is your quantity. So learning technicals is a long-term process. Invest in it, grow slowly. Don't get fooled by all the P&L statements that you see verified or not crap. Most of it is fake, guys. So it takes time for you to make money in stock market. The stock market is designed to take money from your pocket and give it to professional traders, or let's say the smart guys. And the smart guys exist because of people like you and me. So we have to be patient, get cut, never die, right? Only if we get 100 cuts we should die, not in one trade. So it's impossible to get 100 cuts if we follow this process. Very simple, very easy. In 5 minutes I explained it. I leave it to you to look at charts, past charts, and do your homework. And any questions you have, please comment. I'll be happy to help. And again, another system completely free of cost. By the way, I hope all of you are enjoying the Bank Nifty trading system. If you don't know what it is, please, I have posted the link on this video. Please do check it out. Very easy system again, and it's been working fabulously well. So I have actually stopped my forward testing and I started trading it already, and it's giving very good results. So all it takes is 5 to 10 minutes in a day, and then you can close your account and go. That's it. Close your screen and go. That's all. So that's it from me for this, what I hope is a useful tutorial. It is conventional technical analysis spun it Friday Trader one way, and I hope this makes sense. And if you like it, please express it by liking it and sharing it with your friends. Everybody deserves to have good quality stock market education at no cost. Thank you very much.